Welcome to ECNTRADE daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, overnight, the US Federal Reserve raised interest rates as widely expected at 25 basis points and also indicated a serious round of hikes coming this year. Looking at the Australian dollar, the market is now challenging the level around 72.1890 and a break above there would give further scope. One thing to note is the technical implications have slightly strengthened from this candle from overnight, and therefore clearing 72.8590, then we may see a rise up to 73.5, which was previously a rejection point and no doubt will be again if challenged. I'm not overly confident that this rally will sustain and therefore could see a pullback quite easily towards the bottom side of the range, seen around 71.30-35. With the dollar tumbling, the euro has managed to take its stride back to the upside and now looks to the challenge of 110.90 to 111.15, which was clearly rejected previously. In light of the pattern, do keep an eye on these technicals because they have strengthened just recently and we are getting rising lows here and therefore could see that upside test towards that top side of the range. The dollar yen still holding to a bullish case as it takes out the 5-year highs around 118.55, but still I would feel the market is a little bit unsure at this top side of the range as it gets close to that 119. We are extremely overbought, so I do anticipate that the market should take a downturn very soon. In light of the sterling's price action, the bullish divergence has kicked in relatively firm or strong and therefore has actually pushed the market higher and now looks further beyond 131.20-30 and may actually rally onto 132.20 as a potential target as the RSI still remains relatively firm. This is also seeing a little bit of a mixed play when it comes to sterling Kiwi, but I still feel the market in technical terms will strengthen and therefore should look towards that topside target that still holds at 194.2050. Surprisingly, gold took a stab at that 1,900 level and rejected it. And from the rejection, it's showing a little bit of a stronger play into today as the hammer candlestick could actually produce a further rise and therefore look towards the region of 1,936 to 38 and reassess from there, because above that would be 1,948 to 54. But we do need confirmation from this hammer, and therefore if we see a break above the level of 38 would give further indication that we've hit a bottom for now and a short-term rebound is in play. Oil is still, that is West Texas, is still maintaining a bearish pattern. However, keep an eye on this inverted hammer. I still feel the market has $88 a barrel as a potential target and before any profit taking returning. So therefore the market should continue to weigh on the support into today's price action. Well, that wraps it for the morning. Thank you very much for joining me, but please keep an eye out for the intraday report and also the end of the day wrap.